Welcome back to Investing Talk podcast.
Great to be here.
Today we're taking a close look at Box, the cloud content management company. They've got their earnings report coming up soon.
That's right. Always an interesting one to watch in the sauce space.
Exactly. And our mission today is, well, to cut through some of the noise. We want to unpack what analysts are expecting, look back at Box's track record with earnings.
And sort of decipher what the market might be signaling right now.
Right. So by the end of our chat, you should have a much clearer picture of what really matters in their upcoming report.
Hopefully make sense of the key drivers.
And hey, if you find this conversation valuable, please do consider subscribing, maybe leave us a like or drop a comment. It genuinely helps us bring more insights like this to you.
We appreciate the support.
Absolutely. And if there's another company's earnings you'd like us to look into, just mention it in the comments below after its introduction. Oh, and you can always support the show by maybe buying us a coffee, too.
Always welcome.
Okay, so let's kick things off, the basics. When is this Box report actually coming out, and what are the headline numbers analysts are forecasting?
All right. So the report is expected after the market closes on August 26th, 2025.
Okay, August 26th. And the numbers.
The analyst consensus is looking for revenue around $275.1 million.
75.1 million. Got it. And EPS.
Earnings per share, yeah, that's pegged at about 21 cents, 31 cents.
31 cents. Now, sometimes there's that whisper number floating around, what traders really expect. Is there one for Box?
It's interesting. For Box, not so much. There isn't really a widely circulated separate whisper number that people focus on. That consensus EPS, the 31 cents, that's really the key figure everyone's watching.
Okay, so someone calls in 31 cents is the main event for EPS. And how does this line up with what Box itself has been guiding towards?
Well, their own guidance from the last report, it actually signaled pretty much this continued revenue growth, but maybe moderated EPS growth.
Yeah.
So their outlook was fairly close to this current consensus. No huge surprises there based on what they last said.
Right. So the company and analysts are somewhat aligned on the outlook going in. That's a solid baseline.
Exactly.
But knowing the forecast is just one piece, isn't it? Understanding how a company usually behaves around earnings can be super insightful. How has Box performed historically against these estimates? And crucially, how has the stock reacted?
Yeah, history definitely gives us context. And Box, well, they've actually got a pretty impressive streak going. They've consistently beaten the EPS consensus over the last 4 quarters.
Consistently, like every time.
Pretty much, yeah. Looking back, Q2 of fiscal 25, they reported $0.30 versus a $0.25 estimate, so a 5-cent beat.
Nice.
Q1 fiscal 25, they reported $0.44. That's a 4-cent beat.
Okay.
And going back a bit further, Q4 fiscal 24, they reported 5 cents versus a 2-cent estimate, a 3-cent beat. And Q3 fiscal 24 was even stronger. $0.09 reported versus $0.02 estimate. A 7-cent beat there.
Wow. Okay. So they reliably clear that EPS bar. You'd think that kind of consistency would get investors pretty excited, right?
You would think so. But here's where it gets a bit more nuanced with Box.
Ah, okay. What's the catch?
Well, while they do consistently beat on EPS, the market's reaction, the stock price movement after the report, it's often been quite tempered.
Tempered, meaning?
Meaning we often see a short-term pop right after the beat is announced, but those rallies frequently fade. They don't tend to last.
Huh. So the beat itself isn't enough for a sustained move. Why is that?
It really suggests that investors are looking beyond just the current quarter's beat. They seem to need strong forward guidance, a compelling story about future growth to really get behind the stock long term.
Right. So meeting today's numbers is expected, almost priced in maybe. They need that positive outlook.
Exactly. It feels like the market's saying, okay, you beat by a few cents, we expected that. Now what's next? Show us the growth path. Without that strong guidance, even a beat can be met with a bit of a shrug.
That definitely changes how you look at those consistent beats. It's all about the roadmap ahead then.
Seems to be, yeah.
So, okay, beyond the headline EPS beats, what about the underlying trends? What do metrics like revenue growth, margins, cash flow tell us about Box's overall health?
Good question. So looking at those key trends, revenue growth has been, well, consistent, but maybe not spectacular. It's been in the low to mid single-digit range year over year each quarter.
Low to mid single digits, so steady, but not exactly explosive growth like some tech names.
Precisely. It positions Box more like a mature player in that enterprise SaaS space, not really a high-growth disruptor anymore, which means investors might be focusing more on efficiency, on margins.
Makes sense. How are those margins looking?
Gross margin has been ticking up modestly, which is good. Operating income margin has been pretty stable. And importantly, cash flow remains positive and doesn't show much volatility. That's a strong point for stability.
Okay, so a picture emerges. Stable, executing well, generating cash, but maybe that top-line growth isn't setting the world on fire.
That seems fair, yes.
Given that backdrop, what else has been happening? Anything major in the broader market or within Box itself that could sway these upcoming results? Any big news acquisitions, sector shifts this past quarter?
This last quarter was relatively quiet for Box in terms of major headline news. No big M&A deals, no transformative product launches that really changed the narrative. Their focus seems to remain very much on incremental AI integrations, adding AI features into their existing platform for their enterprise customers.
Right, that incremental AI approach feels like the standard playbook for many tech companies right now.
Yeah.
How are the bigger picture trends to the economy, the sector, affecting them?
Well, looking broader, enterprise soft spending overall is cautious but stable. That seems to be the general feeling.
Cautious but stable. Okay.
Some IT budgets are definitely still feeling the pinch from wider economic uncertainty. AI is still the big buzzword, driving interest everywhere, but we're not seeing cloud budgets suddenly accelerating dramatically across the board. They're steady.
And competition, always a factor for Box.
Always. The pressure from the giants, Microsoft, Google, that remains constant. It's just the reality of the space they operate in.
So a steady but somewhat constrained market, AI buzz, and constant competition. What are the analysts saying specifically about Box amidst all this? Any shifts in sentiment?
Analyst commentary recently, it's been leaning towards, I'd say, cautious optimism. We haven't seen a wave of big upgrades or downgrades.
Holding pattern, maybe?
Kind of, yeah. Price targets have generally stayed put. The main concerns you hear analysts mention tend to circle back to that growth deceleration we talked about and the competitive pricing environment.
Yeah.
So it's more of a wait-and-see vibe from the analyst community, too. Not strong conviction either way.
That cautious tone from analysts certainly echoes the market's tempered reaction to past beats. So, okay, fast forward to now, leading up to this report. How's the market actually positioning itself? Is the stock showing excitement, nervousness, or just waiting?
It's quite telling, actually. If you look at Box's share price over the last, say, 2 weeks leading up to earnings, it's mostly traded sideways, flat.
Sideways.
And what's maybe even more interesting is during this period, it's actually underperformed the broader SaaS sector index.
Underperformed.
Yeah.
Okay. So no pre-earnings hype building up. No big run-up.
Nope. No noticeable run-up, but also no significant sell-off either. It really signals a lack of strong conviction from investors heading into the print, a real wait-and-see.
That sideways drift and underperformance definitely points to caution. What about the options market? That often gives clues about expected volatility and sentiment, right?
It does, and looking at the options open interest, it's fairly balanced overall between calls and puts. So not a massive skew one way or the other.
Balanced. But any subtle tells?
Well, there has been slightly more activity concentrated in the at-the-money puts. Puts right around the current stock price.
At the money puts. Suggesting some hedging, people protecting against downside.
That's typically how you'd read it, yes. It suggests options traders might be a bit more focused on hedging potential downside risk than they are on betting on a huge upside breakout. Reinforces that cautious sentiment.
And what level of fireworks is the options market actually bracing for? What's the implied move?
Right now, the options market is pricing in a potential price move of about plus or minus 8% for Box around the earnings announcement.
Plus or minus 8%. Is that high or low for Box historically?
It's actually pretty much right in line with Box's median post-earnings move over the past year or so. So the options market isn't signaling unusually high volatility nor unusually low. It's expecting a move that's, well, par for the course for Box.
Okay, so cautious sentiment, expecting a fairly typical move. Let's tie it all together then. Given the estimates, the history, the market context, what are the likely scenarios playing out after the report drops? And if you had to pick one thing to watch like a hawk, what would it be?
All right, potential outcomes. Let's think bullish first. For a positive reaction, Box probably needs to deliver a clear beat and raise.
Beat and raise, meaning beat the current quarter's numbers and give strong guidance for the next.
Exactly. Especially strong guidance. The market would likely react well if we saw revenue growth reaccelerating, maybe some margin expansion, and critically, some tangible proof points on those AI initiatives translating into upsells or significant new customer wins. That would be the surprise factor.
Got it. And the flip side, what triggers a negative reaction?
Well, the risk of shares heading lower is definitely there if revenue growth stalls out. Or maybe worse, if subscription renewal rates show any weakness. That's a key health metric.
Right.
Also, if management's guidance points to slower growth ahead or maybe contracting margins due to competition or investment needs, that would likely hit the stock.
And anything else on the negative side?
Yeah, if the commentary signals that pricing pressure is intensifying, or if they sound kind of vague or unconvincing about how they plan to actually monetize their AI features effectively, a lack of a clear path to making money from AI could definitely disappoint investors.
Okay. Clear bullish and bearish triggers there. Now, for the listener who maybe only has a minute to glance at the headlines or the report, what's the single most critical piece of information? The one, number, or statement?
If I had to pick just one, it would absolutely be the forward guidance for total revenue and operating margin.
Forward guidance. That's management's forecast.
Exactly. That's them telling us what they expect for the next quarter or the full year. It often carries more weight than just beating the past quarter's numbers. And maybe a close second, keep an eye out for any hard numbers, any quantitative details about their AI pipeline or how AI is actually driving customer expansion. That tells you if it's real or just talk.
Guidance and AI proof points. Got it. So bringing this all together for our listeners looking at Box right now, what's the overall leaning heading into this report?
Based on everything we've discussed, our analysis really points towards a neutral outlook for Box going into earnings.
Neutral. Okay. Can you put a number on that, like a confidence score?
Sure. If we use a scale of 1 to 10, where 1 is very bearish and 10 is very bullish, I'd put it at about a 5, right in the middle.
A 5 out of 10. Why so middle of the road?
Well, Box does have that history of beating EPS estimates, which is a positive. But the size of those beats has usually been modest. And as we discussed, the stock reaction is often muted unless there's really strong guidance or some major strategic news. The risks and potential rewards feel pretty balanced right now. There isn't an obvious strong catalyst pointing clearly up or down in the very near term.
That 5 score really captures that balance, that lack of strong conviction we've been talking about. So thinking practically, what does this mean for different types of investors considering Box around earnings? Any strategy thoughts?
Yeah, let's break it down. For, say, the more risk-averse investor, it probably makes sense to just wait. Wait for the actual report, read the guidance, see the market reaction before considering a position. Box rarely has those huge, sustained post-earnings runs you feel you have to catch immediately. Patience is probably wise.
Okay, wait and see for the cautious. What about someone willing to take on more risk?
For someone with a higher risk tolerance, maybe an options trader, you could consider strategies that play on volatility itself, like a straddle or a strangle.
Could you briefly explain a straddle?
Sure. A straddle basically involves buying both a call option and a put option with the same strike price, right near the current stock price, and the same expiration date. The idea is you profit if the stock makes a big move either up or down, bigger than the cost of the options. You don't have to predict the direction, just that it will move significantly.
So playing that plus or minus 8% implied move we talked about?
Exactly. Potentially profiting from unexpected volatility, even in a stock like Box that's generally considered lower volatility or lower beta.
Interesting. And what about long-term investors? Just hold through it.
For long-term holders, owning Box through earnings probably only makes sense if you're already comfortable with their model. It's steady, maybe slower growth, stability-focused enterprise, SaaS play. Significant near-term upside seems unlikely unless they really surprise with that AI adoption story or give unexpectedly strong guidance. It's more about the long game for them.
That's a really helpful breakdown for different approaches. Okay, as we wrap up our discussion on Box today, maybe one final thought for you, our listener, to mull over.
Yeah.
In this environment where seemingly every company is talking up its AI capabilities, how much of Box's actual future performance do you think will depend on these incremental AI tweaks they're making versus needing something more, a breakthrough, a bolder AI move?
That's a great question. The incremental versus breakthrough debate.
And maybe tied to that, what does Box's steady, perhaps cautious narrative tell us about the broader enterprise software market's real appetite for big AI transformations right now, beyond just the hype cycle? Is caution the prevailing mood?
Lots to think about there. Definitely food for thought.
Indeed. Well, thank you for joining us on Investing Talk podcast. We hope this look at Box was helpful.
My pleasure.
We look forward to sharing more insights with you next time.